Crude oil futures knocked Asian shares today after producers' weekend's talks failed to agree on a plan to curb the global supply glut. Japanese stocks tumbled after a stronger yen hurt the outlook for corporate profits, while general risk appetite was hit following the earthquakes on the island of Kyushu. With the Nikkei sliding 3.4%, Hong Kong stocks tracked regional markets lower, the Hang Seng Index falling by 0.75%. On the mainland, concerns that the market's 7-week rebound may not be sustainable as China's economic recovery remains fragile. Well, that also dampened sentiment, the Shanghai Composite Index losing 1.4%. All right, so the situation on Wall Street, we always look at Friday. Well, as oil prices declines, weighed on energy shares and Apple dragged on the markets. The Nikkei Business Daily reported that the company will continue its reduced production of iPhones in light of sluggish sales. Citigroup shares closing down 0.1% after the company reported a sharp drop in quarterly profit. The Dow Jones Industrial Average falling by 0.1%, the S&P 500 losing 0.1% as well, as did the Nasdaq Composites. All right, let's find out what's been driving the markets both globally and locally. Nompu with the JSC, well, oil producing countries were supposed to have come or reach some conclusion on tackling the oversupply situation. They failed, they didn't do that. Of course, that affected the markets.
Yes, thanks very much, Devon. Yes, they failed dismally. It seems as though OPEC and non-OPEC oil-producing countries could not come to an agreement on what to do in terms of limiting oil output. Saudi Arabia, in particular, was quite vocal. It's got quite a lot of market share among the OPEC group. And it said if Iran doesn't come to the party in terms of also limiting output, then it's not going to bother. Iran has categorically said there's no way we're going to do that. We've just come out of a situation of sanctions. We're trying to ramp up our production. There's no way we can afford to do that. So it's a stalemate and it's fallen flat. So what's happened now is that the oil prices have plunged as a result. This as people lost confidence that obviously there'd be any deal coming anytime soon. And this affected stock markets. It affected particularly your gas and oil stocks and sentiment in general. So that's what happened in that regard. And then the other issue as well is that over the weekend we had the IMF meeting, the IMF Washington spring meeting happen. Finance ministers and central bankers, they were talking about the challenges in the world, the main issue being growth. How can they come up with strategies that can enhance growth across the globe? Ms. Lagarde, who's the head of the IMF, spoke optimistically, but spoke about how there's lots of headwinds in the way. The British are talking about potentially exiting the EU. Many among the banking fraternity are very concerned about that. London is the sort of deal-making hub of the world, and deals have now slowed down as a result of that possibility. It's feared that it will be more negative than positive, not just for Britain, but for the world. And then in the meantime, locally, the Rand has lost some of the gains it made last week. This is partly because a sort of risk-off sentiment has now taken hold, with markets selling off somewhat. I don't know to what extent local domestic factors are also at play, but we'll find out in a little bit. Let's take a look at the indicators. And so now I'm joined by Bright Kumalo. He's a portfolio manager at Vestact. Thank you very much for joining us, sir.
Hi.
Now, we see that markets have sort of sold off slightly. We saw that they began to do so on Friday as well. But what are the main drivers today?
Basically, the main drivers today, you've already spoken about. It's that whole the deal that didn't happen in Doha during the meeting of all the major oil producers, where Iran obviously didn't come to the table, and obviously the Saudi deputy prince said if Iran doesn't come to the party, actually, you know what, this is a no deal, I guess. Yeah. It
seems like it was a complete waste of flights to Doha among all these countries, because there was supposed to be some sort of pre-deal between Russia and Saudi Arabia. I mean, what was the point of all of that?
Yeah, I think it's pretty sad, because even markets, initially when these sort of like rumors or murmurs were happening in the background, markets started going up, and the price of oil, you've seen in the price of oil strengthening in anticipation of the news, but then the actual outcome was very dismal, like you say, and I don't know what it means for markets now, because the markets have been going up as a reason. So we're going to definitely see some sell-offs, not just in Asia or here in Africa, but worldwide. It's going to be a worldwide phenomena here.
And then the last point on the whole oil story, presumably we should see oil prices staying below $40 a barrel for some time to come, given that supply does outstrip demand currently.
Yeah, definitely. I mean, in terms of demand supply, it's unfair, for example, for the likes of Saudi Arabia to actually limit their supply, but the likes of Iran benefiting from that, like, that doesn't make any sense. Like, who would agree to that? So the oil prices should stay actually below that 40 sort of level that we've been seeing as of recent, and we might even see like those levels that we've seen before around in the 36, 37s. Yeah.
Now, over the weekend, the IMF spring meeting, Washington spring meeting was happening. Finance ministers, central bankers, worried really about the growth story. Were you inspired from what came out of the meetings? And obviously, our very own Finance Minister, Pravin Gordhan, was also trying to put South Africa's case forward. Your thoughts?
My thoughts is that so what happens in the IMF is that they cut growth into 3.2%. So this is world growth, right? And everyone lost their mind. I think 3.2% is still a very good number, you know what I mean? I'm very optimistic, obviously, about my country and the world as a whole, but I don't think it was, precedented to say this is bad, there's no good outcome from this. In terms of monetary policies, you know that different countries have different monetary policies, and obviously ours here is to control sort of interest rates, because that's our strategy, that's what we've chosen as a country. We can only do so much with interest rates, okay? And look at the likes of the UK's and the Eurozone basically, and the US. They have more strategies in terms of like at their disposals to actually combat what might come next compared to us, yeah.
And let's keep with the South African monetary policy story. Daniel Minelli, he's a deputy governor of the Reserve Bank. He was speaking in Washington over the weekend, saying that the Reserve Bank is quite amenable to the target band of 3 to 6% being breached every now and again to accommodate, the growth story in South Africa. But on a persistent basis, it would need to re-look at the whole idea of the strategy, the inflation targeting strategy. What did you read into those comments, and what sort of possible policy changes could they make?
I'm not quite sure if South Africa is that flexible in terms of changing their monetary policy that easily. So it's an interesting question actually that you asked, but I'm not quite sure if these guys can actually pull it off. I mean, they're sort of comfortable with the interest rate policy that they currently have. And I mean, when they say they're comfortable with the interest rate going out of the band every now and then, but the question is, for how long can they stomach that,
Because otherwise then it makes the whole thing a bit futile, doesn't
it? Yes.
All right, let's move on. And then the Mineral Resources Department, onto mining sector now, they issued an amended copy of the mining charter. And there's been this whole issue of once empowered, always empowered.
Yes.
So now what they've said to the mining companies is that mining companies must ensure that there's black ownership of 26% constantly. So in other words, if I have, 13% ownership of a company and I'm black and I sell it to a white person, the company must make sure that those shares must now be sold back or given back to black people. How practical is that, and what sort of impact is it going to have on investment in South Africa?
I'm not quite sure what the impacts might be, but it's very interesting to find that the guys came up with actually that mining charter on Friday. There's been a lot of speculation on that, and the likes of Anglo and Glencore have actually gone to court to, protest this, because they're saying it's going to be difficult for them to have that license, those mining rights, and that license ongoing, because it's sort of not practical for them to always constantly have that threshold of 26% of a black shareholder. And in their rights, they arguing that, once we've empowered someone, they're empowered. Even though they decide to sell, we still should have our license as the operator in those mining rights. Obviously, this is a bit difficult, and there's no one way about it and what's the correct sort of approach to this. But, it's good that the guys are doing something in terms of making sure that the mining companies have and constantly will have sort of like black management, black ownership, and also empowering the communities in which these mining companies actually operate in, because that's the biggest problem, right? You're saying you're empowering these black people, but the communities around where the mines operate, they're actually not being developed. So that's the interesting part in terms of this new charter now. It's also looking into that. So, yeah.
We're going to leave it there, Bright. Thank you very much for your time. I'm sure the debate around that whole issue will continue to rage on. Well, that was Bright Khumalo. He's a portfolio manager at Vestat. After the break, Devon has more business news for you.